Hello and welcome to Moving Iron Podcast. This edition of Moving Iron Podcast is brought to you by good friends at Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon Tire would like to give all the loyal listeners a pair of free deerskin gloves by just sending an email to marketing@axontire.com. Shawn needs some of those down there. It's getting cold, getting colder down there. It's almost gonna break into the 60s. So Shawn is quaking in his boots right now. So it's a rough time for the Floridians down there when it comes to this time of the year, spring. So I hope you guys can muster up all the internal fortitude to keep moving forward through the fall.
Yeah, all the snowbirds are going back up north because it's too cold here. So
if you want a pair of those gloves, send marketing the email. Send an email.
I will say in Tallahassee, which is still technically Florida, where my daughter is, it's going to be
the capital. I hope it's still technically Florida.
It's going to be in the 30s, so that's a little chilly. That's a little chilly.
So 30s, you got to define that a little bit.
30s. I think she's only experienced that maybe once, so it'll be a fun, happy time for her.
It'll be the time she talks to her kids about it. Remember that time? When I was in college, I got to 30. Just 39, though, not 30, 39. It just broke in there. you want some deerskin gloves? Go to marketing@axontire.com and we'll send you a free pair of gloves. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs at Valley Transportation. Our goal is to help you reach yours. No matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. TractorZoom has access to over $20 billion in heavy equipment sales data. TractorZoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. Finally, this podcast is brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Create connected customer experience and transform how you work today. Shawn is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the marketplace. So, Shawn, how you doing this morning, man?
Pretty good, Casey. Real good. Real good,
man. Well, we have got a lot of stuff going on in the world right now. Xi Jinping came out yesterday with a nice fiery speech saying we're going to make China again and everybody get out of our way. So that made me feel warm and fuzzy on the inside. You have, Russia doing some very targeted missile strikes throughout Ukraine, in Kiev especially, and they're targeting a lot of basically humanitarian stuff, electrical grids and sewage plants and all those kind of things. And then you got the Chinese out here looking at alternatives to soy meal because there's a shortage that they see out there right now. So let's start with hogs this morning, Shawn. You're looking at this report coming out about the soy meal shortage that they see and high prices that they have and shipping delays that they've had coming out of the United States. As you take a look at what's going on in China with hogs, I mean, how much is this going to impact an already very high-priced Chinese hog market?
Well, I mean, they've had to liquidate these. They had to liquidate the hog market, as we've been talking about. So their animal units right now are very, very low. Mm-hmm. So they actually don't have a lot of need for bean meal at the moment. Whenever they start to rebuild the herd, they will need bean meal again. So that's really, it's a question of preparing for when they will need it again. And but for right now, who knows what the truth is in China? I mean, nobody really knows. Do they have a shortage of meal or not? I know they have a shortage of pork. I know they have a shortage of hogs. I know their feed demand needs are low right now, but at some point they'll need more meal, and they'll have to go buy those. I think what they're trying to do is, now that the harvest has come in here from the U.S., and it looks so far like the best start to the soybean crop in Brazil in 5 or 6 years. I think they're going to try to wait it out and see if they can't get a bunch of supplies out of Brazil, and then handpick, when they want to buy supplies from us.
Right.
So.
Yep. So just from we've We've talked about this quite a bit on here as you look at the varying market influencers that are out there. With that kind of the speech that Xi Jinping put out yesterday, talking about really accelerating the Taiwan timeline there.
Yeah.
How much pressure do you think? I mean, what's market's response going to be that today, you think?
Well, look, he's coming out of this meeting. They talked about whatever they're going to talk about. So somehow this 5-year plan is going to kind of filter out in the market, and he's going to apply himself now with this indoctrination that he's there for life.
Right.
So it's going to be a different. I think he's going to have different policies now than he had before. He had a certain set of policies that he felt he needed to get through this big meeting and to get to the other side. But I think now he's going to, really do what he probably felt he wanted to do before, but didn't feel he could do it, given that he was trying to get this final lifetime approval.
Right. So when you have the as you're looking at what's going on right now with the corn soybean markets, you've seen some big moves in those marketplaces. You saw them get kind of smashed last week when the CPI report came out, but they all, for whatever reason, the markets were all rebounded nicely by the end of the day for the most part. When you're looking at what's going on now, the soybean market now, we're seeing, harvest is rapidly getting done quicker than and more easily than we've seen in the past year, just because of what weather conditions have looked like. I guess as you're looking at what's going on now in the corn market, Shawn, what are your thoughts there?
Harvest supplies keep coming in. That's going to keep the market well supported, or well supplied. The river being low is going to continue to back up some exports that would otherwise be delivered. And right now, so long as Brazil weather looks really, really good, it's going to override the Argentina weather that's been, kind of unfavorable. And so I just think we're stuck on corn right now, Casey. I don't really see a major justification for much higher prices. I see some justification for prices to come down, but I don't see the justification yet to bring prices down aggressively. That would only happen December, January, if the market is making the decision that we're going to have big crops out of South America. So I kind of feel like we've priced all this bullish news in, and we probably just need to work down some prices as harvest pressure comes in, supplies come on the market. And remember, everywhere in the world we look, there's less animal feeding units than we had a year ago, which means that the ability to bid up feed, or the desire to bid up feed at these higher prices is just not going to be there. So I just think, if I'm a producer cash selling corn here at this upper level band, I think is the right thing to be doing right now. If it looks like we're going to have a big weather rally on Argentina later in the season, you can always do something to counteract that. But I just think these prices, on top of what we had in May, are going to be your high watermark for a while, especially with El Nino weather pattern arriving by the spring. It's just going to be really hard to do anything but build ending stocks over the next 12 months in corn and soybeans and in wheat, from what we see. Now the dry weather in in the southern plains and all with the KC wheat, that looks to me like it's going to get a little better. We're getting some rain, spotty rain. Planting is on pace. I just don't think that's going to be enough to drive the wheat market. It still comes down to what's going on with Russia, and is that news going to excite the market more than it already was, or not? And right now, the market's getting bored from Russia. I'm not saying what's going on there is not really important, but they're just not. They're not reacting in the way that they were. I think they're moving. They're feeling it's a lot of stuff going on, but the issue with the corridor deal is still on. And until that looks like it's going to come off, what is it, another 40 days, Casey, 35 days?
End of November, yeah, something like that. Yeah.
I think it's just going to be, it's sad, all these things that are happening. But in terms of the price of wheat, for example, it has to be, is all of that going to stop supplies coming out of Ukraine? right now, the market is saying they're not worried about it, at least not right now.
So. Right on. Okay. Natural gas, something we talked about in here quite a bit. And there's an article out this morning talking about natural gas. On average, will be $931 more. Or they're going to pay $931 between October and March, which is a 28% increase over last year, especially with what we see happening with dry and corn harvest going on in particularly the United States, where they dry down corn quite a bit in dryers using natural gas. Do you see anything out there right now that shows that natural gas is going to do anything other than what you've talked about moving up to this point?
The problem with natural gas, the first thing is we lost that export terminal, that Freeport export terminal. Sure. It's not going to come fully back online until December. So we lost all those exports that would have gone out. We've had high prices now for a year. Production is growing very rapidly, as you would expect to eventually see. I mean, $7, $8 natural gas prices. Anyone that's operating a fracking well in natural gas is making an obscene amount of money. So production's growing. The injections into U.S. storage the last 3 weeks have been absolutely off the charts. If you look at the injection graph of natural gas going to storage, there was a gap of about 400 million British thermal units that we were down from a year ago. And it looks to me like we could end the rebuild season higher than we were last year at this time, the way we're building injections into storage. And I don't see this winter being a real nasty cold one like last year. I don't see a big polar vortex, extreme, cold. And I see it being kind of a more milder winter. There's always some cold weather, but not the big polar vortex extreme weather that really drives demand for natural gas and freezes those wellheads. I don't see that. I think we're going to have a warm start. November could be very warm. I don't know, Casey. I'm just not feeling, when you look at the natural gas storage in Europe, they're at 95% of full capacity. And, they're having some warm weather. I think the warm weather is going to continue also. In November, it looks to me like they could get to 100% of their normal storage going into the winter season. Obviously, they're not getting all the natural gas from Russia that they had in the past. They'll still have to buy LNG from the U.S. and elsewhere, but at 100% capacity, unless they have a record cold winter, which we're not forecasting, I think this energy crisis for natural gas has been kicked forward a year. I just doesn't look to me like we have this set up for this year. Doesn't mean it's going to be great. Doesn't mean we won't have some weather rallies, but I think we are going to get through this one because of a warm winter and because, high prices have done what high prices always do, which is improve at least U.S. production of liquid natural gas. So prices now are under 6. I'm not saying we're going all the way back down to 3.5 where we were, 2 years ago when we started the big bull market, but we might find ourselves, sitting around 5.5, maybe for an extended period of time until we kind of work through this and get to the other side.
Right. Okay, so when you're talking about a milder winter, like what do you mean by that?
Well, last year we had a negative quasi-biennial oscillation. And we had a major La Nina. Both create an amplified jet stream pattern. Amplified pattern means it destabilizes the polar vortex and creates these polar vortex events. We call these stretches last year where the polar vortex stretched, and then we finally had one just totally break apart in late February that led to that late ending winter that we had been predicting all year long. We don't have that this year. We have a La Nina that's going to be weakening it, and actually by the time we get to the end of the winter, it's going to be gone, and we're actually going to be moving into El Nino. That means that the amplified jet stream is going to flatten because you're losing the La Nina amplification. This year, we have a positive quasi-biennial oscillation. Positive means east to west. I'm sorry, west to east is positive. Last year, it was east to west. That also helps elongate the upper airflow pattern. So when you elongate and take the amplification of the jet stream off, that means your polar vortex is going to stay very strong, cylindrical, It's not going to all, we're not going to get all these distortions. It's just going to be a very stable polar vortex this year. And unless you get that destabilization, the only kind of cold you're get is more of what I'd call not Arctic air, just, they call it polar air. Comes in from Canada, you get the right airflow and you get some, but it's not that, minus 35, 20 degrees below normal all the way into Texas. I don't see that happening this year. And it means more of a kind of a northern, northern tier, maybe northeast tier, but you're not going to get the cold plunging far south like you did when you get these big undulations downward. So that overall says to me it's more of a mild winter. It's not going to be a long ending winter. Not going to have extreme cold that really, really sets the natural gas in a bad spot. You'll have a weather rally from time to time. We always do every year, get a little cold air coming in, but I don't see this being the winter like we had last year. And for what Europe needs in terms of what they need right now, they need a more mild winter. So their demand is down. They've already had some demand destruction. If your house is above 65 degrees, they're going to fine you there now or something like that, So I think when we look at, we're going to be able to get through this winter without actually anywhere near as much trouble as we thought. And that's actually going to improve the economic outlook for Europe, at least this winter. I'm a little more worried about what happens, when the next cold winter comes, unless Russia supplies, Casey, come back online. And it doesn't look like they are anytime soon. If you have a cold winter, like a really, really cold winter, that's when the crisis could hit, especially, if we have any kind of additional escalation or disruption in geopolitical issues that we're dealing with right now. So I kind of feel we've kicked the can down the road. I know the market keeps talking about this energy crisis for Europe, but I actually don't think I think the probabilities of that happening now are very remote. And quite frankly, for the people there and for the economy and for the good of the global economy, that's a good thing for that to have happened. And so, we might have just dodged a bullet on this one. I don't, hopefully in the next 12 months, other good things will happen that will allow us to dodge the bullet again. But I think at least for this winter, I'm not expecting any fireworks like we had last year. I don't see that.
Right on. Do you see more snowpack in the mountains in the western part of the United States this winter?
The back half of the winter, yes. And the reason is that when you're dealing with a La Nina leaving and an El Nino coming, El Nino is a much wetter pattern. So it has a lot more moisture attached to it, much more humidity. So even though it's not as cold, Casey, it's always cold enough in the mountains, right? So with more precipitation potential and your normal cold air in the mountains, we are expecting to see a much better snowpack season in the back half of the winter when the La Nina leaves and we start moving towards warmer sea surface temperatures in the Central Pacific. So if you're into the skiing or the slopes or the mountains and the rain, all that sort of thing, I think we're going to have a better snowpack. And obviously the snowpack's very important for helping fill up some of those reservoirs and lakes that are extremely dry, and the allocations that are being considered, in terms of reducing those allocations of water rights and such. It doesn't mean it's going to get it back up to 100%, but it will help a lot to go into the season with some better, water capabilities, than they've had the last couple of years, Casey. Yeah. So
cool. I like to shred. So yeah, get those mountains and carve it up or fall down, one of the two, whatever comes first, I guess. All right, man. Last topic here. So we're looking over and seeing what's happening in wheat and what you see happening there. India just raised some local wheat purchasing prices. You saw some stuff there. You see what they've done with broken rice and what that looks like. The planting issues that we've seen here in the U.S. There's some places that have gotten some rain that needed rain during those planting times. So I guess, Shawn, looking at wheat right now, it's still kind of the little train that could have been pulling the market up, and those kind of things. So looking at wheat, what's your thoughts?
I think the dry weather, which, even though some rains have come in and it's helping, especially when they're trying to get the crop, seeded right now and drilled in. I think that issue isn't really going to go away. We're going to go into dormancy with a lot of the crop not in great conditions. That's going to help prevent the market from falling too far from where we are now. I don't think it rallies the market from here, though.
Okay.
To rally the market from here, you're going to need an adverse spring post dormancy, and whether that's here or whether that's in Russia, and I don't see that. I see a very, very productive El Nino, wet, mild spring season, which is exactly what you want. So even though the crop may not the entire crop may not go into dormancy in the best of conditions, I think that the crop that's okay, that comes out, it's going to have such good weather that those yields are going to be so big, it'll override the areas that even with good weather can't make the grade. So I just think that that's going to be the bigger issue, is that we're finally going to have a really good spring season, which we have not had the last 2 years. And we're going to have a much bigger crop than we've been accustomed to seeing in the last 2 years. And that's really going to help, put the genie back in the bottle, because the U.S. is always the supplier of last resort. Historically, you buy corn when you can't get it from anybody else. You buy soybeans when you can't get it from anybody else. You buy wheat when you can't get it from anybody else. So if we have a big crop, then everyone's going to feel comfortable that, well, we don't have to panic anymore because the U.S. has got it. And if we need it, we can always call them and get some wheat, because they're always reliable sellers to us. It's going to be a big change. But in the meantime, the market's not going to it's not going to know that until we get there. But I do think that for now, the downside's protected from that dry weather. But the upside's got to come from more Russia issues, especially around this grain corridor. What happens as the clock ticks closer to the expiration of that deal? That will be a really important time, and there'll be wild speculation of what's going to happen if they find a way to keep it going. It's going to be very hard for the wheat market to rally if they delay a decision or they temporarily halt the deal. It could be fireworks to the upside, like we just saw. Remember we went up to 9.5. Now we've already dropped the dollar back down on just like that, because of the change in the perception of the geopolitics in Russia. So the way I'm viewing this, Casey, is I don't know how to predict those things. I'm not sure anybody does. But if I'm a producer, I want to keep selling every time the market gets excited about geopolitics and runs the market up into that $9.5, $10 area, like it's been wanting to do, whether you're looking at KC wheat, Chicago trade wheat, or spring wheat. I think you need to be a cash seller, be opportunistic. And we had recommended, when the market took off on the last go around, when they had that bombing of the bridge, that if we got to that area, we would be cash sellers. And then the market's now down $1 from that level. So I just think you have to look at the situation that way. Don't know what's going to happen, but if we keep periodically getting those rallies on geopolitics, it's a phenomenal price. You're a very profitable wheat farmer selling at those prices. And I just think that's the strategy until we get a clear idea of what's really going to happen in the long term there. So
right on. Okay. Shawn, good stuff as usual. Folks want to reach out to you and get more information about what you're doing over at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. We have information on our weather algorithm, capital flows algorithm, and a lot of the unique fundamental work that we do that helps form the basis of our price forecasts, to see if that kind of information would be of value to your listeners.
Right on. Well, Shawn, appreciate you being on the podcast, man.
Thanks, Casey. Always a pleasure, and look forward to doing this again.
All right, man. We'll see you Thursday. All right. I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, on LinkedIn at Moving Iron Podcast, and the ever so cleverly named Moving Iron Podcast YouTube channel. Check that out there. If you want to see the video version of this podcast, check it out there. Also, the good folks at Axon Tire are giving out a $50 discount to the first 150 people that sign up for the Moving Iron Summit coming up here in Nashville, Tennessee. That's September 11th through the 13th, and that's in Nashville, down at the Hilton Hotel downtown. So if you're interested in doing that, go over to the Moving Iron LLC website and click the site over there. I'll have more information up here about what things are going to look like and schedules and those kind of things, probably in late November, mid to late November, what that looks like. So, but if you want to go ahead and get signed up, go ahead and do that now. and Axon Tire will send you we'll give you a $50 discount when you use Axon at checkout. So make sure you do that. So with that, I am Casey Seymour with Shawn Hackett. Smooth Smart Folks out.
Moving higher in the 21st century. Hardwood